Investors across the board have plenty to digest this morning, with Donald Trump sending markets into a tailspin with new tariffs. Closer to home, mining giant Rio Tinto has kicked off earnings season in style, and the property market has put another month of modest price gains under its belt. And on top of that, we've got continuing problems with NAB management. So to help us unpack it all, Chris Kohler joins us live now. Chris, first let's talk about Donald Trump and the escalating trade war, if we can put it that way, is back on. How do you read it?
Yeah, it's interesting, isn't it? I mean, there's been a few times that Donald Trump has shown us the way he wants to go about trade negotiations with China, but really this one was quite abrupt, seeming to come out of nowhere in a way that the market had kind of been getting a little bit more confident, letting things get together. I mean, Robert Lighthizer, the US trade representative over there with face-to-face talks with China, people were starting to feel a little bit good, and then all of a sudden, whack, another 10% on $300 billion worth of Chinese imports. So really, that is what has hurt the US market so much, falling 1.9% from the intraday high. A huge fall there, and then you see the commodity price falls. I mean, it is looking a bit nasty. Donald Trump, interestingly, saying that he's not at all concerned about the market reaction, which kind of doesn't really read all that clearly, because yesterday it's all he wanted to talk about. The market wanted this out of the Federal Reserve, didn't get it. How dare you? So it was kind of an interesting couple of days from Donald Trump.
Yeah, so is it timely? I mean, how are you reading into this? I mean, this comes, yeah, like you said, 24 hours after those 24 basis points were cut by the Federal Reserve.
Yeah, it's an interesting one, and it kind of does make a little bit more sense about why Donald Trump was coming down so hard on Jerome Powell and the board of the Federal Reserve for not passing on deeper interest rate cuts and also giving a really clear guidance that there were going to be more to come, because obviously he was about to announce another 10% tariff on $300 billion worth of goods. Now, that hits the US economy in a kind of a similar way as it does the Chinese economy. Yes, it hurts China's economy, and they don't want to see it at all. But people in the US who are going to be buying things like children's clothing, smartphones, laptops, they're all going to have to take a hit here, because the prices aren't going to be able to adjust immediately. So it is quite interesting to see what the Federal Reserve is up against here.
Yep, OK, moving on, Chris. Let's talk about Ken Henry, the NAB boss. He knew 5 months before the Banking Royal Commission that the NAB was ripping off its customers.
Yeah, this is a really alarming story for a whole number of reasons, of course. As you say, 5 months before he took this stand in what was a really disastrous appearance for him at the Royal Commission, he was telling external auditors that he was confident that the bank was ripping off customers and that it was going to have to remediate at some point. Now, he singled out some self-managed superannuation products specifically, but really this is only coming to light through a leak. Of course, we've had a really forensic look through the Australian banking system via the Royal Commission, and they did a tremendous job. The final report was really dense as well. And then we had this APRA capability review, and now we're having to talk about whether or not we're going to have a parliamentary inquiry. Just really highlights the complete lack of faith going on at all of our big major institutions. And also it's worth mentioning that Ken Henry is still in the job as chair, because, you know, Ross McEwen's going to be coming into the job potentially not until April next year. And then Phil Cronican will move into the chair role. But right now, yeah, you know, he's still there. It's a strange situation.
Yep, all right. Moving on to Rio Tinto now. It's announced a special $1 billion dividend.
Yeah, if that's not enough to keep shareholders happy, what is, right? I know, exactly. This is really kicking off earnings season with quite a bit of a flourish. I mean, the first half EBIT, $10.25 billion, a really whopping result there. Slightly below analyst expectations, though. The headlines, as you say, really around this special $1 billion dividend, which is on top of its interim dividend. Really, you know, Jean-Sébastien Jacques, the CEO of Rio Tinto, actually spoke with our own business editor, Tiki Fullerton, last night, and he had this to say about the special dividend.
You know, I mean, at the end of the day, what is important for us is to create value for our shareholders, superior value for our shareholders, and look what we've delivered in the last 3 years. You know, $29 billion in the last 3 years of cash return to our shareholders. Our share price has doubled or tripled depending on the currency you're looking at it. If you look at the first 6 months of this year, 47% EBITDA margin, highest for the last 10 years for us. If I look at return on capital employed, 23%, which is the highest ever that we can remember.
So, Pete, we're going to see at about 10:15 what the market actually makes of all of that, whether or not people are going to be satisfied that Rio Tinto has done enough with, you know, iron ore prices up around 5.5-year highs. But it'll be interesting to see that at the open.